So this is like the big thing. This is like the main reason why I fucking got into this game and I was like interested in it. I was like, I've never, ever, ever, ever made money from a video game ever. This is the first time. And now they have a revenue distribution platform where you as an individual, you don't have to play the game. Fuck the game. You don't have to play the game. You could just buy the token, stake the token into the protocol, and you can earn passive income. You can earn revenue. So whenever the studio makes money, you make money. Hello and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over week 4 of our numbers. This is the start of also Illuvium's revenue distribution, which we're going to cover in this video. So let's start with week 4. Today's August 17th, or Saturday, so we're going over the previous week's numbers. So currently our portfolio net worth is at $129.88. Since the beginning of this portfolio, I've deposited $10 every week, just automatic. And when M1 Finance exceeds $25 in cash in your portfolio's cash account, it'll automatically deposit into your account based on your distributions. So, you know, we have gold at 30%, bonds at 25%, and so on. So it'll distribute that money. So once it gets over $25, it puts in the money. So put in $30, 3 individual deposits over 3 weeks. So this is what our portfolio curve looks like now. So you'll see kind of in this middle area here, this is when the $30 got put in. So you see this increase, but we go off our money weighted return. So not the increase of the money put in the account, but our trading activity. So you see the net cash flow of $30.09 right here. So that's what got added in. But our portfolio over the week has actually increased 1.13% for a market gain of 91 cents. And that's primarily due to gold, and we're going to go over that. So we kind of had our flat line, and then that money got dropped in, and then it came in. So next week, you'll see the curve normalize again the following week, and every time there's a deposit, the curve will kind of get distorted just because we put in that cash balance. So starting on August 12th, you see we're at $98.88, and then ending on August 17th, after that $30 got put in, we're at $129.88. So just keep that in mind. About every 3 weeks or so, we'll have a deposit into the account and it'll distort our curve. It'll look like it increased a lot, which it did in terms of value, cash value. But again, we're looking at our rate of return, so our money weighted return. So even though it went up essentially 30% in one day just for that cash balance increase, the actual portfolio performance was 1.13%. So something to bear in mind. So this is week 4. We have week 3. Remember, week 3 in the beginning, it came off a volatile week from the previous Friday. So you have this drop down here, and then the portfolio went sideways and then kind of came back up towards Friday. Now, since that week coming into this week, I believe the stock market's pretty much recovered its drawdown that it had. So it's being very volatile. But this was our drawdown coming in Monday from the previous volatile weekend, flatlined, and then it came back up. So current week, previous week. Now here's our percentage return. As you can see for this week, our biggest return by far was in gold, 3.38% or $1.19. So you see it's still at a 30% allocation on our portfolio. This by far has been our best return so far, on a long-term chart especially, but 3.38% in 1 week. So this is why we're up this 1.13%. It's mainly because of our gold position. Gold really spiked up these past few days. Our second position is our government bonds. It increased 0.31% or 0.09 cents, and you see we still have it at a 25% allocation. We have our US dollar ETF at 0.42% or down 0.42% for a loss of 10 cents. It's still at a 20% allocation. Our equal weight S&P 500 ETF, it's up 2.49% or 29 cents, still at a 10% allocation. So you see this recovery happen. So remember, it went down and then it recovered. So a lot of what was lost these previous weeks has been added back. Our commodities are down 0.42% or 5 cents, and we're still having it at a 10% allocation. And our Bitcoin ETF is down 1.75% or 10 cents. and we still have it at a 5% allocation. Now its current weighting is about 4.3%, but remember we keep it at a 5% allocation, so it'll fluctuate. This is week 4. Week 3, the previous week, you see, was pretty flat. The biggest change was Bitcoin at 2.21%, and the allocations are all still the same as what they are right now for the current week. So this is week 3's performance. This is our current week's performance. So our transactions. So remember, you hear see on the left, we had 5 buys for $30.09. That was the $30 we added for our auto deposits. And again, when it increases past $25 in the cash account, it automatically deposits it based on your weightings. So however these weightings are, it'll take that $30 and distribute it amongst them. So a good way to see that is you see $39 for our gold position here this week. Look at the previous week before the $30 got added. It's at $29. Oops, there we go. All right, so 29, so it went up $10. If you look at the government bonds, it's now at $32.36 because it got increased. Previous week was $23.97. So just to give you an idea, it just equally distributes it across the assets based on your percentages. Okay. So if we look at that just based on the price, we'll see commodities, they added $3.07. The US dollar index added $6.44. Gold, our biggest position, got added $9.07. Our equal weight ETF for stocks added $3.21. And our second largest holding, government bonds, is at $8.30. So you see, this is all that what got added out of that 30 and how it got distributed amongst the ETFs. Oops, too far too fast. Okay, so now the most exciting part of this video. Illuvium finally begun the revenue distribution. You see in the corner right here, we have the revenue distribution. So it finally started happening. This is like something I've been waiting for 3 years, so this is really good. So you see we have our dashboard. We still have our 1.32 IOV weighting, right? So that's how much tokens we have staked, right? The current price as of recording is about $40.79. The pending rewards is still 0. Remember, these are going to be zeroed out. But this is what we're looking at, revenue distribution. All right, revenue distribution, finally. So we're getting passive income now. Our ROI for our investment portfolio here is based on our trading. All right, our return on investment is based on our trading. Our ROI for the Illuvium staking part of our portfolio is passive income. So we stake tokens, and then whenever the studio gets revenue, they distribute it to the token stakers, people who are staking the token. Remember, staking a token is like a certificate of deposit from a bank or a CD, where you lock up your money for a period of time, and the bank offers you an interest rate for that. So if you pick a 1 year lockup, say $100, you lock up $100 for 1 year, the bank will say, okay, at the end of that 1 year, we'll give you 5% on your money. So after the end of 1 year or 365 days, the bank returns you your $100 plus 5%, which will give you $5, so you get $105, right? Similar to this, you're locking up your money in the protocol for a period of time, and then during that period of time, whenever the studio gets revenue, they pay it out to the stakers in the form of revenue distribution, which you see here. So for our 1.32 ILV, which is the current net worth of $53.79, we got paid out 0.0053 ILV, that's the token, which comes out to about 22 cents. So $53.79 got 22 cents, okay? Now this is gonna be every time they pay out, we're gonna get this number go up and up and up. It's gonna add up. So it's our passive income. So this is our vesting. So you see 1.32 amount we vested. The source is a deposit. The weighting is 2. The reason why it's a weighting of 2 is the longer you lock it up, the higher weighting you get. And the weighting's per token. It's not the dollar amount, it's the token amount. So if you do a very short duration, it would be like a weighting of 1. And the maximum duration, which is 1 year, is a weighting of 2. So we want to essentially double our rewards is what we're trying to do, but we lock it up for a longer period of time. So we started July 27th. That's when we first locked it up. And it will unlock the money we locked up here, this 1.32 IOV. It will unlock in 344 days. So we got a long way to go still. And again, this is our revenue distribution. So this is like the big thing. This is like the main reason why I fucking got into this game and I was like interested in it. I was like, I've never, ever, ever, ever made money from a video game, ever. This is the first time. And now they have a revenue distribution platform where you as an individual, you don't have to play the game. fuck the game. You don't have to play the game. You can just buy the token, stake the token into the protocol, and you can earn passive income. You can earn revenue. So whenever the studio makes money, you make money, right? Obviously, I'm never going to make as much as the founders who hold a shit ton of tokens, but the fact that they give us the opportunity to also participate in this is crazy. This is what I've been waiting for. So the way it works out currently, and this is probably subject to change in the future, is once they accumulate about $150 Ethereum worth of value in their vault, you know, what they hold the money in, then they distribute it. Now, I don't know if equivalents count, like ILV token or a stable coin or just cash or whatever. I don't know if it has to be 150 Ethereum. I don't know what their work is, but currently that's what they're saying. So when the vault accumulates in terms of like fees and transactions, 150 Ethereum worth of a value, that's when they distribute it. So everyone will get their payout depending on the weighting. So we only have 1.32 of Illuvium, which equals about $53, right? So we get our 0.0053 ILV, which currently equals 22 cents. Now remember, this is a token, so the price will fluctuate. If the price goes up, for the same amount of ILV token that I got, the 0.0053, the value in dollar terms can go up. It can go from 22 cents to 32 cents to 50 cents to $1, whatever. It could go up in value and fluctuate. But this is the big thing. We're waiting for this for a long time. So that is our weekly numbers. Now let's go over our charts. So gold, like I said, our big performer this week. Like I believe it went up like, you see right here, where's it at? 2.24%, that change. 2.24%, that's in one day. So just on Friday, that went up 2.24%. Like, why am I struggling? So gold moved in a big day. You see this big spike right here too. You can see it. This is on a yearly chart, but you can see how big this spike is. Let's zoom in on this. So this is a 1 year chart. You see, look at this magnificent uptrend that's been holding all the way back here since October of 23. Beautiful trend. This is why we own gold. Just killing it. This is a 3 month chart. So you see right here, this is just this week. Let's actually zoom in 5 days. Look at this spike right here. Look at this. This happened on 15th, no, 16th. Just went boom. Right? Just boom. This happened on Friday. This popped. This went straight vertical. Right? And then it just trickled upwards. It kind of pulled back and just kept going and climbing. So they're fucking buying gold right now. I don't know why. But gold is at its all-time high pretty much. Yeah, it's at its like all-time high. Crazy. Gold's doing fantastic for us. That's why it's our largest allocation. Look at this uptrend. It's beautiful. You can't deny this. When you look at it on a chart, you can't deny it. All right, nothing has a good uptrend in our portfolio like gold right now. It's crazy. All right, government bonds. So remember, we drew these lines when we first started the portfolio. This part wasn't here. So if I actually do this, it kind of looked like this before we had this big uptrend. We were like basically saying, okay, something's going to happen because there's this wedge pattern happening. There's these two lines happening. And then, I don't know, or boom, broke out. Right, broke out of this trend and went up. So this is about when we started getting into bonds, right around this area, because that was when the market crashed. This popped, interest rates dropped, so which means bonds will pop up, and we increased our portfolio position. So bonds has been a good position for us. I'm thinking, fingers crossed, I have no idea what's going to happen, but at some point the Federal Reserve is going to start lowering interest rates, which I think is going to be positive for our bond position. Now you look at it on a 5-year chart, this is where it gets fucked up. Look how much it's come down, right? Look how much it's come down, right? So I'm hoping that this is somewhere near the bottom in bonds right now, and it's going to go up from here. This is a risky bet. This is a pretty risky bet because I've owned bonds back here in the past in my main portfolio, not the YouTube portfolio I'm doing here, my main portfolio. And you know, I lost money on this. I had gold and dollars, which balanced out, actually was net positive, but like this was a losing trade. People bought bonds just like me, thinking they were going to go up with all this risky environment, but when they started raising interest rates, the negative correlation is bonds go down. Now we hope the reverse is going to happen. They're going to start lowering interest rates, and then that means bond prices are going to start coming back up. So we're going to see what happens. Now UUP, our dollar index. This one, this is a 5 year? Yeah, it's a 5 years. Let's zoom in on a 1 year. So we had this wedge pattern happening right here, and then it broke down. Remember the inverse of bonds. So a wedge pattern, then went up, then dollar, wedge pattern, and then went down. Now I'm still haven't decided to pull out some of my position of dollars just because dollars are less volatile, number one, so even if it goes down, it's not by much. See, it's 0.49 over here, it's not too much. But I'm still concerned for risk in the markets. So I think at the moment we're still keeping it at this percentage of 20%. Right, but just remember, you got the inverse. You got bonds going up and then dollar going down. You basically have the same wedge pattern almost, but you know, they just inverse of one another. Then commodities. So commodities, we reduced it originally from 20 down to 10. You know, it broke down here. Now I think this is mainly because inflation's been coming down, even though it's still high relative. If you look at from the period of 2020, the beginning of the pandemic, to today, people will look at the timestamps of commodities, or the timestamp of the CPI index, and look, oh, it's down at 2.9% or 3%, whatever, and say, oh, it's down. Remember, it's cumulative. So every month that's coming out, you know, that's cumulative. It's overall corroding the value of your purchasing power. So since the beginning of the pandemic to now, you know, collectively, you know, the CPI increased like 25%. Like inflation increased 25% in total. So 25% of your purchasing power got cut down, which is why people go to the grocery store, things look more expensive. When they buy products, things look more expensive. When they buy a home or a car, it looks more expensive. When they buy pretty much anything, it just seems more expensive. You know, that's the cumulative damage that inflation is doing to purchasing power. So we rode this for a while, you know, like in this wedge right here. It was going up, right? This is when it was rising, but now it's coming down, so we're selling out of this. So this was more in my personal portfolio. When it was rising, I was like, I'm buying it. And then stocks, you see, look at it come back up. Look at it come back up out of there. My gosh. Yeah, this was all last week. It's just everything that lost here, you know, like it's giving back now. Like it came down and then like it's trying to give it back. It's such a quick turnaround. That's very volatile when turnaround's very quick like that. But stocks are, you know, I feel like they're still overvalued. There's just too much. Like I just feel like it's still overvalued still. So I'm just kind of being hesitant. Now we look at our Bitcoin. I'm gonna kind of fix this line. Don't look too straight to me. Look at that one. There we go. I'm gonna do that right there. Gotta make my lines look a little cleaner, just in my mind. So we had our run up here from October 23, up and up and up. Crazy spike out of this trend, came back down, hit hard right here at this line, came back up and then crashed through. And then we got this like little micro trend right here where it came down, up and up, and then it crashed down again. Now we got another one kind of rising up here. So it looks like it hit here. Remember, this is that crazy volatile day a couple weeks ago. And then it starts rising back up some. So it's starting to have kind of a recovery. And like I said, Bitcoin and the stock market are relatively the same. You know, you're going to get similar, not the same, similar performance. And it's hard when the stock market is performing bad for Bitcoin to perform good, you know, because those are the more speculative investments. So when you're speculating and the main market is crashing, it's hard for other speculative assets to also do well in an environment. So let's kind of look at real quick, just the S&P 500. So this is what I was talking about. Look at this. Look at this. So this is a drop down. This is July 16th. Started coming down, and this was around, yeah, this is the 5th, so this is that crazy ass day, couple days we had. And look at, already back. Look at this V right here. Look at, let's zoom in on this V. Look at this V. Look at this V pattern. Look how hard this dropped. Look how hard it came back. This is not normal. This is not normal. This is very volatile. This is very volatile. This is why, like I said, I'm just cautious on stocks. Not to mention, if I go all the way back, this is like historical. Look at this all-time high. We're like way up here. This goes back to 1971. 71? Yeah. So early 70s to today. We're just like, whew. I'm not saying it's gonna crash down all the way down here or anything, but I'm just like, we're so high on this thing. So we got on a 5-year. This looks more simplest. So we had this uptrend. So this was COVID pandemic right here. Right, this drop right here. And then just boom, same thing, kind of had this V pattern, just kept going. And then 22, the beginning of 22, January 22 came down, crashed, or crashing. And then pretty much beginning of 23 went up. And now we have this, like, this pattern here trying to, like, crash down and spike back up. It's very volatile. So I don't know what's going to happen. I don't know if it's going to return to this long-term trend that we kind of have here, which it broke out of. Maybe it will, maybe it won't. It might crash through it. It might crash through the bottom of it. I don't know. But those are kind of our long-term, you know, look at the market right now. So other than that, not too much volatility as the previous week. It's a definitely more exciting week for sure. The biggest thing this week was the ILV distribution payment starting. So like I said, every 150 worth of Ethereum they accumulate from transactions, in-game fees, stuff like that, they then distribute to token holders, which has never been done before. This is all new. So if you're at all interested in passive income, ROI through passive income, this is just one way. Right? You don't have to do it. I'm just showing how I'm doing it, right? I have my main portfolio, which none of this is. I just copy my main portfolio and do a starter portfolio for this channel so people can kind of see it from inception, like building it up from scratch. But I'm doing the same thing I'm doing with my personal account. So I already have my own ILV account with more tokens in it that I'm also receiving revenue distribution. But for this account, we're just going little by little, just keeping it simple. And I will once a month increase the amount of ILV I have staked. So I'll do another stake probably next week. Yeah, probably around the 27th, because that's when I started last month on the 27th. And what I'll do is I'll claim my revenue distribution, because that's not locked. My money deposit's locked in, but my revenue distribution is not. I can claim that at any time. So when I deposit more money into my Illuvium wallet and then I stake it, I'll also claim my revenue and stake that as well together. So it'll be one stake, those two together. So my auto deposit and my revenue distribution will be staked together. And we're just gonna do that every month. So you're gonna kind of see this thing, how it grows. So hopefully that was a good update for you all. This is again week number 4. We're gonna go week by week, keep doing this just so you can follow along with me. So if you have any questions, criticism, comments, anything like that, let me know. I hope you enjoyed the content, and I will see you on the next video. Thank you.